Europe in a global context will be piece of the a piece of the investment horizon. It has no real growth scenario. The question really is behind that: are the investors expecting real estate to be a growth contribution part of their portfolio? And again, I come back to my very repetitive mantra of real estate being the new fixed income, and the historically high connection between interest rates and real estate performance, and the historical high spread between the two. And Europe will deliver relatively high. If you play that game of spread, will deliver very high on that. There is no real scenario of money becoming any more expensive moving forward. And if I understood Mr. Draghi correctly, he's got a bigger gun than a bazooka now. So I wonder what that's going to look like. So that's going to make money extremely cheap moving forward, whatever he pulls out of his sack. So on that basis, I think the pressure and the interest in capital will remain. You could also argue the euro depreciating against the US dollar. Even if interest rates pick up in the US, that change and that you're going to get more euro real estate for your dollar may counteract the actual fact that if interest rates do move up in the US, money should be, and usually very quickly, it gets taken out of the European system. Yeah? There was the 2007-8 scenario that people tend to put somewhere down into the past, and that's exactly what happened then. So I think that, again, will make Europe attractive for a few people. Now, within Europe itself, or in Asia has the China Damocles sword hanging above its head. So that'll be interesting to see how much of that Asian capital will really come in and really commit and stay for the long term. That remains to be seen. I think that's the bit of the undiscovered, or the questionable part of the equation of weight of capital in Europe. Again, so that's the cash flow side. Europe has done a fine job of keeping developments low, which is the one thing that, and we're at the top of the cycle. I don't think we need to ask that question anymore. No matter what market you're looking at, we're on the top of the cycle in Europe. Maybe leave out Switzerland a bit, or Zurich, and maybe Warsaw is having a bit difficulties. Even they're counteracting via high investment volumes, just not total growth figures. So we're in the top of the market, both, and the only thing that looks good looking forward is low supply coming on the market, hence why rental growth actually having a chance, always differentiated between the Irish and Spanish recovery scenario. But even moving forward, if you look at 2015 to 2020 and to 2025, it all looks relatively positive, and it all looks like that rental growth can actually offset a potential, I think we saw it earlier, reduction in yields. So all in, it looks very, very stable. And I think stability is something that every investor is going to want to have in his global allocation to real estate. There's disparities within the European market, and you can play those against each other. There may be a bit more future in the Spanish market at the moment. I don't see the product, but it could be. And the Nordics has a very good story moving forward, differentiated, and I can only agree with what was said before. You need to have a strong look at the market. You have to go for the right product, but you have to do that everywhere. And financing, again, is keeping back. They're both not the financing for development, but also not for every deal, is a nice hedge against things getting very, very silly in this kind of a market. So there's a good story out there. But again, everybody's dancing away at this party, but I do find that a lot of people are dancing away more towards the exit. Yeah? And there is a bit of caution out there. Now, caution is a nice thing, because caution will prevent you from overextending. And as long as that's the case in both development, in all asset classes, leave resi out of it. And the nice thing about resi, by the way, one last thing, then I'm done. Resi is keeping the developers busy on the commercial side. I mean, it's a capacity issue. You can't, there's just so many developers and construction companies out there. So, especially for Germany, the low supply actually has a rental growth scenario. Again, accessing that is a different issue, but looking at it as a total return, Europe has a safe haven, or not even a safe haven, a conservative block that every investor will be looking at, and hence why the likelihood moving forward is solid, But again, there's bound to be a black swan out there somewhere because it's a paradigm change. It can't go on flat. It doesn't happen. It's never happened in the past. Show me one flat line, and if it's not the interest rate, show me the flat line. It doesn't. Humans don't like flat. Maybe the Dutch do, but apart from that, flat just isn't in the DNA. Yeah, they want change. They want movement. They need movement. Financial markets need movement, but there is never a flat line for 5 years. It doesn't happen. So all that moving forward flat line. They said that 2.6 too, and 2.7 didn't look so flat after that. But the parameters and the surrounding data is solid for us as well to keep investing, and yes, and hopefully also competitively in Sweden.